Things are looking bullish for Bitcoin again, as the price rockets past 64,000 and flirts with key short squeeze liquidation levels above 65K. ETFs have another monster day. Craig Wright capitulates and admits on his website he is not Satoshi Nakamoto. And Trump's pick for vice president, JD Vance, is pro Bitcoin and pro crypto. The dominoes are continuing to fall. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. People still seem to be in a state of disorientation right now. Like, how could these things actually be happening? Sort of like listening to Ingrid Andress during the 2024 MLB Home Run Derby last night.
For the land of the free and the home of the brave.
But like a baseball flying off of Bobby Witt Jr. and Teoscar Hernandez's bat last night during the swing-off, Bitcoin's price is taking off. There's 8 billion in shorts that are set to get liquidated if Bitcoin crosses 65K. Too bad for Germany, who sold a little bit too early, just like most people who are starting to learn about this thing called Bitcoin. All things seem to be bullish for Bitcoin right now. As yesterday, Bitcoin ETFs had another massive day of inflows at over $300 million. And the truth is finally coming out, as imposters like Craig Wright, who claim to be Satoshi Nakamoto, are being proved wrong publicly, like having this warning on their website that says they are not Satoshi Nakamoto. The tides are turning, as just a few months ago, if you did business as a Bitcoin company or promoted Bitcoin in your company, you were likely to be banned or turned off from companies like Stripe, which today, the $65 billion payment company announced that it's going to allow its European customers to buy Bitcoin through debit and credit cards on its platform. Talk about a change in narrative. In other news, Donald Trump's pick for vice president, JD Vance, has a pretty pro-Bitcoin and pro-crypto agenda. And by the way, it was reported back in 2022 that he actually owned up to 6.5 Bitcoin. You bullish enough? Listen how he has a 180-degree view and approach to current SEC Chair Gary Gensler during this video.
If there's a candidate for worst person, in my view, at least in terms of my substantive disagreements, I'm sure he's like a nice guy, is Gary Gensler. Okay, so Gary Gensler is sort of the complete opposite of my view. And there are two problems that I have with Gary. One of which is that I think he wants to inject politics way too much into the actual business of securities in the United States of America. But in some ways, the more fundamental issue, or at least the most relevant issue for this particular conference is the approach that Gary has taken to regulating blockchain and crypto seems to be almost the exact opposite of what it should be. And I'm oversimplifying a little bit, but the question the SEC seems to ask in regulating crypto is this a token with utility? And if it's a token with utility, then they seem to want to ban it. And if it's a token without utility, they don't seem to care. I almost think we should be the opposite here, right? I worry about financialization. I worry about, frankly, whether a lot of the crypto stuff is fundamentally fake. But if a token actually has utility, that's the sort of thing that, by all means, regulate it. By all means, be careful about, how consumers interact with it. But you don't want to just get rid of this stuff. And here's where I really, really worry about this is a lot of the newest challengers to social media, the social media incumbents of 2024, are going to require some blockchain technology to make their business work. Maybe they'll require a token that supports verification. There are all of these ways in which the companies, when I talk to sort of friends who are still in the VC industry, the companies that are most exciting to them, they're doing actual things in communications in the 21st century, in 2024, I should say. Those companies very often rely on high utility tokens to do things like verification. Well, if we're not making it possible to do verification, then we're going to make it really hard to challenge the existing incumbents in the space.
Across the world, you're starting to see cracks in the system. Like trying to hold a beach ball underwater, it's hard to cover up things that are breaking for long. Like the Japanese yen, who had a $13 billion to $22 billion intervention in order to keep the yen from going lower from its 38-year low against the dollar last Friday. And like a zombie from Thriller or The Walking Dead, it's rising back to that same level of 159 again. Will the Japanese having to sell U.S. treasuries be the first domino to fall in the U.S. debt bubble? Like letters falling off of the Wells Fargo building in Jacksonville, cracks are starting to show in the system. And you know, one tried and true way over the last 5,000 years to measure whether there is cracks in the system is the price of gold, which has made all-time highs at over $2,400 per ounce today. Gold making all-time new highs is a pretty good indicator that the economy is not doing so well or inflation is continuing to be persistently sticky. If that weren't enough news for you to be bullish about Bitcoin, look at this tweet from President Joe Biden and his administration today, saying that in order to lower housing costs, he's going to implement reforms to cap rents across the country, as well as build 2 million homes in America. As if the government intervening in anything has made anything cheaper. Did you know that you could buy another investment vehicle that is scarce, digital real estate, or Bitcoin, digital property, that can't have more supply just printed onto the market, like in homes or real estate? Something to consider. Oh, and this digital real estate has really only been outperformed by NVIDIA. I don't know if you've heard of it, or some other company called MicroStrategy. Oh, yeah, which is a Bitcoin company that implemented the first Bitcoin treasury for any publicly traded company. Something to consider. And we know that Bitcoin is the great absorber of liquidity. And although I'm not putting too much stock in this, the market seems to think that the Fed will cut rates in September. In fact, it's pricing this event in at 100% probability. And one of the key metrics that the Fed has been looking at and saying that they needed more data on to lower or cut rates was the amount of inflation that was in the economy. We know that employment is starting to slow and sour, but they needed inflation to be a little bit less sticky and a little bit less high. Well, according to the New York Fed, their multivariate core trend rating is at 2.4%, which is as low as it's been since 2020. You think that's enough ammunition for the Fed? We'll see. Something to consider. And I'm not leaving this up as a rhetorical question. One thing you should consider as Bitcoin is about to enter another bull run is, how are you securing your Bitcoin? Are you taking the necessary steps to learn about self-custody and securing this life-changing asset? Well, if you want to learn the ins and outs of self-custody, join our completely free webinar tomorrow at 3 p.m. Eastern, as we'll have two people from our engineering team, Christian Amundsen, as well as Brandon Black, and Terrence Yang from our Swan Private team, walking through all of the ways and the steps for self-custodying your Bitcoin. It's okay if you can't make the webinar live. Again, it's at 3 p.m. Eastern, 12 p.m. Pacific. You can just sign up using the link in the description and you'll get the recording afterwards. And with that, we're signing off for the day. This is Dante Cook with Swan.com. Happy stacking.